Welcome to the channel. I'm James, and today I'm going through my valuation methods for Coinbase stock. What we're going to be doing is analyzing their financial statements, then going through two different models. We're going to be looking at discounted free cash flow and the Buffett-Graham intrinsic value to give my fair value on the stock. Is this a buy or a sell? You can see Coinbase has had a pretty rough couple of months, down from its all-time high of $380 and is currently trading at $173.49. That is almost down 10% on the day. So what is Coinbase? Well, Coinbase are an American company that operates in the cryptocurrency exchange platform. It offers a primary financial account in the crypto economy for retail users and a marketplace with a pool of liquidity for transacting in crypto assets for institutions. If we look at their latest Q3 2021 report, you can see the trading volume between retail and institutional, and you can see retail is down from the previous quarter and the previous two quarters to 93 billion, but is up substantially from where it was this time last year, where it was at about 18 billion. If we look at the institutional, you can see that has also decreased from Q2 of 2021, but is up from Q1 of 2021 and is almost 10 times higher than it was in the previous year. So interestingly enough, the largest amount of trading volume on the side is institutional, with almost 234 billion trades. But this does not mean that institutional is the largest revenue generator for Coinbase, because if we look on the fees for Coinbase Pro, as the pricing tiers increase to those higher amounts, the fees dramatically drop. And you can see the trading volume of each of the assets that they have defined down here, which is Bitcoin, Ethereum, and other. Bitcoin is currently at about 19%, Ethereum at 22%, and other crypto assets at 60%. And then if we look at the revenue of each one of these, Bitcoin, Ethereum, and crypto, you can see that the other crypto assets make up the majority of it, with Ethereum and Bitcoin being pretty much neck and neck, which is considerably different from what it was in 2020, where Bitcoin was the main generator of revenue. Coinbase currently has a market cap of $80 billion, share price of 117, 52-week low of 170, and the 52-week high of 429. It does not pay a dividend, so let's have a look at my steps. Is the PE ratio less than the market? Yes, it is. Coinbase's PE ratio is definitely lower than the market with 22.6 and the market at 26, so that is a pass. Revenue has increased massively since 2018, which is when they started reporting this, and it was $500 million and has now gone up to almost 6. You can see how the revenue has been broken down in the statements here. Revenue of retail is at about $1 billion, and revenue on the institutional is 67 billion. Revenue is down from Q2 and Q1, but up dramatically from where it was this time last year, and it's almost gone up 4 times that amount, from 275 to 1.08 billion. Also, they have subscription and service revenue, which is up from the previous quarters at 145 million, which is showing good growth in the subscription styles, which has been a popular thing for companies. Next, we want to see if the profit is increasing, and yes, it has. It went from minus 30 million to 2.5 billion in the green. So that's a massive, massive check mark. This company is very profitable. And if we look at the net income here from the previous year, profit has gone up almost by 5 times, but is down from the previous 2 quarters. Next, we want to see if the shares outstanding are decreasing. And as you can see here, the Coinbase shares have remained the same at 183 million. So that is a pass because they have not issued more shares. And finally, is the free cash flow increasing? Yes, it is. It went from minus 121 million to almost 10 billion in free cash flow. So overall, we have 5 passes and 0 failures. And if we look at the free cash flow ratio of the stock, which is the total of the stock, the total market cap divided by the free cash flow, which is 80 divided by just shy of 10, that gives you a free cash flow ratio of 8.14, which is very, very low. This is the kind of levels you would see in a company like AT&T when it was still profitable, or Ford, but this is not a company like that. This is a high growth tech stock, so very rare to see. So now we're going to look at discounted free cash flow and the Buffett-Graham intrinsic value analysis. We've calculated the future free cash flows here, and as you can see, these are pretty conservative estimates, with 2025 even not achieving what we've had in free cash flow for 2020. But let's see what this gives us as a value. Well, that would actually give a calculated stock price of $400 a share, which is a 128% discount, which is obviously a massive buy. And next we look at the Buffett-Graham intrinsic value, which takes earnings per share and expected growth rate, and Coinbase has a massive expected growth rate of 66%, and that even gives a higher fair value of $1,900 a share, which is a massive increase of almost 1,000%. Both of these models are easily saying this stock is a buy, but obviously it has been hammered recently with the crypto market decreasing. So fundamentally, this company is solid, but the problem is it's connected massively to Bitcoin. So if we just do a comparison here of Bitcoin and Coinbase, you can see both of the charts follow each other pretty closely. If we look since the IPO, Bitcoin has had lower swings and slightly higher swings, but Coinbase price has pretty consistently followed it. Crazy to see it this charted out and how closely these two things are correlated. The thing about Coinbase is that it has solid fundamentals, but whenever the crypto market drops, Coinbase also drops, which is incorrect from the market to view that way, because if people are buying and selling crypto or selling crypto on Coinbase are still making massive profits. But overall, I think this stock is a buy based on the models. I think it's solid fundamentally, but it seems to go where Bitcoin goes. And if we look at the analysts have it a strong buy with 15 rating, 13 buying, 1 holding and 1 selling. The average target price for this time next year is $411.43, which is 140% upside. On the low side, it is still 130, which is the stock almost doubling. And on the high side, it is at almost $600 a share. So analysts really like this stock as well. This will be an interesting stock to follow, but as I said before, solid fundamentally, but very stuck to what Bitcoin is doing. I think eventually this consensus will change once people realize that Coinbase is a solid fundamental stock, but until then it is a bit troublesome. Right guys, thanks for watching. Please give a like on the video and I'll catch you guys next time.